I can't find my checkbook. I know I have one, but I haven't seen it for months. And actually, this is really a problem for me because my daughter's school will only accept cash or check for her dinner money. But I don't carry cash either. So I go to school, I forget to pay, I come home, and then every week they send home letters for me in her book bag. And the sums that I owe them keep totting up, and it's really embarrassing. And now I drop her at school, and I kind of drop her around the corner, and I rush away so that I don't catch the eye of the lady in the school office again. When I get back, I will have to go to the ATM and sort it out. It's almost the end of term, for heaven's sake. But checks. I mean, who uses checks these days? I tell you who, my elderly 90-year-old aunt uses checks. She's fantastic, lovely lady, I love her to bits, and she never, ever forgets a birthday or an occasion, and so we'll get a card. And inside the card is a check for a tenner. So I'll put it in my wallet. Wallet goes in my bag. And I never go to the bank. I don't go to the bank. I don't wait in queues to pay in a check. I don't want to wait several days for the check to clear. I do all my banking online or on my phone. So the check sits in my bag for months, and then it expires. And I don't have the heart to tell her. So I'll just buy the kids something anyway. Since I was young, there are many, many industries that have been utterly transformed by the internet. Media, communications, travel. But the reality is that the financial services industry is almost the same as it always has been. We still save, borrow, invest, manage our money in very much the same way that we did a couple of decades ago. Yes, there have been some advances. Yes, some things have changed. Yes, I can get a loan online if I want to. But the bigger picture is that less than 1% of loans made in the world today are made online. We are just at the beginning of the revolution in financial services that is to come. One of the single biggest innovations to enter the market in the last decade is the smartphone. We check, on average, our smartphones 46 times a day. And for those of you in the audience who are 18 to 24, it's 74 times a day. We're surgically attached to our phones, and we can do amazing things on our phone. And they know so much about us, and the apps that we use know so much about us. I mean, Facebook knows who my friends and family are. They know what they look like. They know where I am most of the time, and they know a lot about what I'm doing. Google knows pretty much what I'm thinking about a lot of the time because it's the first place that I go when I'm looking for information. Ocado knows what I eat because that's where I do all of my grocery shopping. And for everything else, there's Amazon. But if you think about it, what does my bank know about me? My bank knows everything that I buy, all of my transactions, all of my household expenditure. Almost every day there is something about me that is going through my bank. And yet, what are they doing with that data to make my life easier? Or to provide me with new products and services that surprise and delight me? Absolutely nothing. What a wasted opportunity. Banks, I know, we hate them, right? Nobody trusts the banks. If you ever even think about your bank, you probably think about it in a negative way, but you are using it almost every day. the problem is that we don't trust banks anymore. I mean, the banks were single-handedly responsible for the global financial crisis in 2008 and pretty much everything bad that's happened ever since. If you listen to Nigel Farage, the bankers are even responsible for Brexit. Everybody was voting to get the bankers out of the UK, apparently, and that might be the single thing that they can deliver, given that a lot of banks are going to be transferring their headquarters to Dublin, potentially, and elsewhere. So banks are under a lot of pressure. But the question is, why are we so excited about this? Well, we're so excited about it because it's huge. The top 500 banks in the world in 2014 made about $650 billion in profits. And so there are a whole ton of people that are saying, you know what, I want a piece of that. So on the one hand, we have the startups, and they are nimble, they are innovative, they're well-funded. Last year, about $14 billion went into fintech startups from the venture capital community. And what they're doing is you may have heard the word unbundling the bank. They are choosing specific services. It might be payments, it might be money transfer, it might be lending. And they are developing new digital-first, low-cost, easy-to-deliver services that delight the consumer. So it's kind of death by 1,000 cuts for the banks. And then on the other side, you've got the big internet companies. And they have brand, they have consumer bases, and they have technology capability. There was a survey earlier this year in the US of 10,000 millennials. And the survey found that 73% of millennials in the States would rather bank with Google, Amazon, Apple, Square, or PayPal than they would with their bank. And 33% of them don't see the need for a bank at all. Wow. I mean, those figures are incredible. If I was a bank, I would be really, really afraid. So what is it that we can do now online that we couldn't do before? Well, if you want to manage your money, but you don't have enough assets to be able to go to a financial advisor, you can use a robo-advisor. It's an online automated program that will take into consideration your personal circumstances and will deliver you a wealth management advice that was previously only available for the very wealthy. Or if you have a business idea and you need to raise money, don't go to venture capitalists. Go online to a crowdfunding platform and raise money from the crowd. That's a source of capital that was never previously available. Or if you go out for a restaurant and you have a meal and you want to split the bill with your friends, then you can just use peer-to-peer payments on your phone, instant mobile money transfer. And there are more examples. But as I say, it's still at relatively early stages. But for me, I'm based in London, one of the really exciting things about fintech is that Europe is where it's at. We're not playing second fiddle to Silicon Valley in this. Silicon Valley doesn't have a major financial center. So if you look at some of the companies that are up here, these are well-funded, and a number of them are unicorns that are delivering real market-leading services. And I want to highlight here Finergo, which is an Irish company that many of you will know. So a lot of the companies here are what I would call FinTech 1.0. They're addressing the consumer-facing services. Finergo works with banks to manage regulatory and compliance risk. And it's working with the banks, not against them. And I guess that brings me to my next slide, which is really about what happens next. The banks are starting to fight back. They are investing in financial services startups. There was about $5 billion invested by the banks last year, but it's still pretty tiny compared to the $50 billion that they invested in their legacy infrastructure. So the next phase, for me, is the really exciting one. I mean, banks have massive challenges, huge legacy infrastructures, facing big regulatory pressures. They are really under pressure to cut costs. And so it's working with technology companies to deliver that I think is going to be some of the areas where you see greatest value. Banks process hundreds of millions of transactions on a daily basis. So let's use advances in cybersecurity, in blockchain, in artificial intelligence to fight cybercrime and to reduce fraud. Let's look at those legacy infrastructure, think about cost, and bring in cloud technology to automate business processes or to allow agile, flexible responses and delivery of new services. Let's use, when you're facing regulatory and compliance pressures, let's use companies like Finergo and others to deliver better regulatory monitoring, reporting and control, and deliver value to consumers. So, as I said at the beginning, we're just at the start of this fintech revolution. The next phase is about really going into the core of the banking infrastructure, the core of their processes, and delivering truly transformational change in this industry. It's fintech 2.0, and it's really only just begun. So who's going to be the winners? Well, if we think about it, banks have formidable assets, but the largest travel company in the world doesn't own any hotels. The largest taxi company in the world doesn't own any taxis. The largest shopping mall in the world doesn't own any shops. There's still a lot to play for in this market, and I think we're going to see a big bun fight as people jostle for position. We've got the banks themselves. They'll be buying companies in order to be able to offer new digital-first services. We've got the internet companies. They'll be out there buying new consumer-facing strong propositions. We've got the technology companies. They'll be snapping up the emerging technologies and the sector-specific specialists so that they can build out their offering for the financial services industry, which in terms of expenditure on technology is massive. And then you'll have the financial buyers, the private equity houses, and they will be buying pretty much anything that's scaling and doing well. There's a huge amount of value at stake, ladies and gentlemen, and we've really only just begun. Thank you.